With more than 6,000 small and micro-cap companies listed, if you're looking for the next Apple at the earliest stage, then Channelchek truly is the orchard. The listed companies support Channelchek, so it's free for you, the potential investor, to gain access to institutional quality research from FINRA licensed analysts, advanced market data, industry reports, news, and a growing catalog of videos and webcasts. Make sure to subscribe to our YouTube channel and register for Channelchek so you're always up to date on what's going on at the small and microcap data place. Welcome to the virtual Roadshow series presented by Channelchek. This Roadshow features Peter Gianulis, President and CEO of Allegiant Gold, OTC ticker symbol AUXXF, TSXV ticker symbol AUAU. Following a formal presentation, Peter is joined by Mark Reichman, Senior Research Analyst for Noble Capital Markets, a FINRA-licensed SEC-registered broker-dealer, for a Q&A session featuring questions that were submitted by the live audience. You can find Mark's research on Allegiant Gold on channelchek.com or by clicking the link in the description. With that, I am pleased to present Peter Gianulis.
Hi, good morning. Thank you very much for everyone participating on this call. My name is Peter Gianulis, CEO of Allegiant Gold. I've been CEO for about a year and a half. I've been part of Allegiant for over 13 years. I'm going to take you, over the next 10 to 15 minutes, take you through our general presentation and discuss some of the salient points which I think are very important with respect to Allegiant. The timing really couldn't be better, considering kind of like the mini meltdown on the junior exploration industry. I think that things are really starting to align very well for the sector, for the gold market as a whole, and for the junior companies, which I think have a project or a resource that they're advancing. So with that being said, we'll launch into the presentation. The next slide, if you can advance it, is the forward-looking statements. Very important to read that and spend some time looking at that. The next slide, I'll spend a few minutes talking about where we are in the cycle. I think it's important. I'm starting to discuss more and more where we are in the cycle. Obviously, people at Noble and Channelchek can discuss that much better. That being said, I've been in this industry for about 23, 24 years. I've lived through some great moments, some horrible moments, and at times we feel there's a tremendous amount of despair. I'd like to remind everyone that gold is still close to 1750. And if you would have told us 2 years ago that gold was going to be 1750, I think everyone would have been ecstatic and very happy. That being said, when gold hit close to 2100 and then now come back in a normal correction, this is not something that is anything out of the ordinary. We're back into this despair state where everyone is questioning whether this industry has any potential. I think we're an amazing point for investors to take positions in companies. Gold is still 1750. I would have been happy with 1750 2 years ago, and we continue to believe this is probably the early stage of a multi-year cycle for the junior exploration and the precious metals market. Next slide, please. I think it's very important to understand relative valuations in this industry. Although the senior market, the senior producers and mining companies did very well, it's important to realize that the valuation metrics, whether it's relative to the junior versus senior or just relative to the spot price of gold, the junior miners and the junior exploration companies continue to be extremely undervalued relative to any metric that you choose to look at. We believe that over the next 2 to 3 years, the junior market will be revalued, and we'll potentially see companies being valued at $100, $150, $200 an ounce for the resource in ground. Next slide. Apologies. So that being said, what makes Allegiant special? I think there's 5 main aspects that really separate Allegiant from the rest of the industry. The first is that we have a large inferred resource of 1 million ounces of gold and close to 8 million ounces of silver. think it's important for investors when they look in the junior exploration market and understand what risk they want to take. Myself, having been an investor for 20 plus years, I tend to look at companies in the junior market that already have an existing resource. And I can now define what that risk I'm willing to take, which is that company either increasing resources or improving the economics of the resource. And so we'll talk a little bit about what we're doing in the next few slides. The second aspect, which I think separates us, is a strong technical team. Our team has been together at Allegiant and Columbus previous to that for the past 15 years. Led by Andy Wallace, who has probably discovered and put into production more mines in Nevada than anyone else alive. Third is jurisdiction. Nevada continues to be ranked #1 or #2 as the best jurisdiction. I continue to believe that jurisdiction is increasingly more important relative to the rest of the world, and Nevada just really is as good as it gets. The fourth is cash flow. We've been able to maintain a very low share count relative to the industry, primarily based on our model, which is farming out projects which are not our core and focusing on our core project, which is Eastside. And that allows us to receive cash payments or share payments in companies. That allows us to have work programs initiated. And then third is allow us to maintain an interest in our projects. And today we have 3 farm outs, one with Suma Silver, one with New Placer Dome, and the other with a company who operates our project in Arizona. And what we believe that will happen over the next year will continue to farm out other projects and generate cash that allows us to not have to dilute our shareholders. And then the fifth is skin in the game. Management insiders have bought a very large stake in the company in the open market. And in times when we're not restricted, you'll see us in the market buying shares. Next slide, please. So the team is led by myself. I've been in the market in this industry for well over 20 years. Have helped not only finance companies, but help bring those companies along from early stage exploration companies to producing companies. Andy Wallace, we discussed, Robert Juster as an advisor, Norm Pitcher, and Sean Nichols. One individual who just joined our board is a guy named Gordon Bogdan, and Gordon will make it on the next slide, but Gordon has over 30 years of experience in this industry. He's been a wonderful addition for us and has been a great board member since he just joined a few weeks ago. Next slide. Our projects quickly. Our main flagship project is called Eastside. That's the 1 million ounce gold, 8 million ounces of silver, located near the town of Tonopah. The infrastructure is amazing. We're about 20 minutes from the town of Tonopah. We have electricity on site, water, a water well, a highway that just drives right up to our gate. Just really couldn't ask for a better project. And then we have projects throughout Nevada, Arizona, and New Mexico. Clanton Hills is the project I was referring to, as well as Four Metals and Mogollon, which are farmed out. Four Metals is farmed out to Barksdale. I forgot to mention them, and then in Mogollon to Suma Silver. Next slide, please. Eastside is our main project and is the center of where our drilling is occurring. We initiated a 15,000 meter program late last year. We drilled approximately 6,000 meters on the south zone, which is identified by the Berg, Boss, Castle, and Blackrock area. And then we started about a month ago drilling the north zone to the western edge of the original pit zone, which contains 1 million ounces. We've already drilled about 7 to 8 holes. We believe we'll finalize that program over the next week. It'll be approximately 4,000 to 4,500 meters. So we'll have close to 10 to 11,000 meters drilled. We'll wait for those assays, and then we'll release a global news release on our findings and the results, including all the assays. Our goal initially on the south zone was threefold: was to identify additional resources, was to prove up some of the historical resources, and then third was to prove our theory of a low strip ratio area. And we'll talk about that in our upcoming news release. The goal of the North Zone was to find additional resources, also to reduce strip, and to prove a few of the theories that we had in terms of at depth, in terms of mineralization at depth, which I think will help increase the resource base. And the real goal of this is to publish an updated resource estimate, 43-101, which would include the South Zone, and we're hopeful that that will occur over the next 4 to 8 weeks, and we've already started that process, and we will give a more in-depth update over the next 1 to 2 weeks, including the South and the North Zone. So look forward to a few pieces of information and news releases upcoming. Next slide, please. The initial news, the initial updated 43-101 that we published a year ago in January of 2020 showed approximately 1 million ounces of gold, 8 million ounces of silver, although now it is no longer acceptable to show gold equivalent ounces. We show it there, but I will warn everyone that to get to the gold equivalent, you need to talk about recovery and other aspects. So going forward, we're just going to be talking about gold ounces, and that's approximately 1 million ounces. What's the goal of Eastside? We believe that Eastside hosts a large resource, gold resource in different pit areas that could potentially reach 2 to 5 million ounces. In the short run, our goal is to prove up 1.5 to 2 million ounces over the next 12 months in gold, and then some additional silver. And then from there, make decisions on how we will continue to expand those resources. To put that in perspective, there are very, very few gold exploration companies in Nevada that host over 1 million ounces of gold, and literally a handful of them that can make that claim. Now, we have a historical resource in the southern zone called Castle Zone. That is that's the area where we really can't really discuss it because it's a historical resource. But the purpose of our drilling, on the last drilling that ended last year and we'll be releasing in the near future, will prove up those resources into a 43-101 resource estimate. Next slide. 2020, just to talk about, we were extremely busy. It won't go through all the points, but basically it highlights a lot of the things that we were able to accomplish. We're very proud of what we did over the last year, and this year we've started as busy as we were last year, where we've been drilling at the North Zone. We've been very, very quiet from a news release perspective, just because we want to make sure we have every information and we can provide information. The other aspect that I think is important to mention is the way we approach junior exploration on the precious metal side. It's our strong belief that this is a long-term industry. We want to make sure that investors understand all the data that's coming in, understand everything that we discuss, and understand what's our strategy. Our strategy is very simple: prove up a multi-million ounce deposit. We're very methodical and disciplined in how we approach that, and therefore that's how we tend to operate. Is most of the money that we have tends to go into the ground. And I think we're making amazing progress in building up a major resource in Nevada. Next slide. So to 2021, our goals and objectives, I think it's very important because we're in the middle of a lot of these things, is to complete the 10 to 15,000 meters of drilling. We've already completed 10,000 meters. The additional 5,000 meters that we'll drill will happen on our east pediment, what we call pediment 8, which is about 500 meters to the east of the original pit zone. The goal there is to test additional targets where we ran a geochemical and a geophysical program. We are excited about it. It's dependent on the second point, which is our expanded permit area. We've submitted all the required documentation to the BLM and to all the agencies in Nevada. We've had a series of comments, and we've addressed those and questions, and henceforth we feel very comfortable that over the next few months we'll be able to obtain our permit and therefore initiate the next round of drilling. The third goal we set was a farming out of an additional project. We are in discussions with a few companies to farm out one or two other projects, and nothing else to update on that except it's something we're doing constantly. The fourth is after the drilling is completed in the next week, then we will be not only initiating a scoping study or PEA, we're going to be first before that PEA we'll potentially move to a updated resource estimate on Eastside. The fifth is continued investor awareness by doing great programs with Noble Capital Markets, talking to investors. We're very, very open. We try to communicate constantly with the investors, and with the caveat that we're constantly busy. We're in the field all the time, and we're in the middle of drilling, so sometimes it's not as easy to respond as we typically do, which is very, very very rapidly. And then the final point is the exercise of the warrants. We have those that expire around December of this year, and those will expire and they're exercisable at 40 cents. But those are the things that are outlying out there in the industry, and we're not necessarily concerned about that. Or just throw that out, and if they get exercised, great. If they don't, we're in very good. We're in a very good position because of our business model. Next slide, please. We talk about our cash flow, and this makes some assumptions that in the event that all of these companies continue to move forward the projects, but you can look at what we expect in 2021, 2022, and 2023 in terms of cash. We're very comfortable where we stand today, and it just gives you an idea of the cash that we have coming in. And we like to say anytime we raise money, and the last time we raised money was over about a year ago, all that money will go into the ground. Next slide, please. And then our share structure, we have 77 million shares outstanding, warrants outstanding, some RSUs, about 88 million fully diluted, which includes the warrants outstanding. And we have a great investor base. Insiders own a significant portion of the stock, and we continue to move forward on this, and we're able to maintain a very low short share count relative to the industry because of our business model. Next slide. We constantly are discussing why we believe we're relatively undervalued relative to the industry, and we put up a couple companies that we measure ourselves, or we can tend to be measured against. If you look at companies that actually have resources around that area, including what we call the Great Basin, which would be Nevada and Utah, primarily Idaho. But so if you look at many of the companies in which operate with in the same sector, it's clear that we're grossly undervalued relative to the rest of the industry. Next slide. We talked about some predictions, and I'll just run through this very, very quickly. And this was I gave at the end of January. I continue to believe that we're going to have Bitcoin prices well under 15,000. And when I made this comment, I think it was 42,000. So obviously, it's been not right, but I think that once Bitcoin prices collapse, I think it's going to be a very good thing for gold because it is a direct competitor to gold. I think we're going to experience a 20% correction in the S&P. I think we're just getting started on that. This may actually be the actual correction. It looked like the U.S. budget deficits, this is before some of the stimulus was coming, was going to be close to 2 trillion. I made the comment that we're probably going to look at 3 trillion. I believe there's going to be a rush into the U.S. dollar for liquidity. And I continue to believe that that's going to happen. I don't think that it will be negative for gold. And then finally, I think that gold prices, once this correction is over, will take off. And I think we're going to see gold rally significantly this year. And it may be any time now, all the way up to the end of the year. But I do see a major run on gold in the next coming months. I'll turn it over, and that'll conclude my prepared remarks on the presentation, and I'll take any Q&A. So Mark, I'll turn it over to you.
Thank you, Peter. I'm Mark Reichman, the Noble Senior Analyst who covers Allegiant Gold, and I will be reading the questions submitted for Peter's response. So the first question is how much was spent on exploration and drilling in 2020, and what are your expectations in 2021?
So in exploration, just if I look at it from a calendar year, we tend to look at it from season, but to answer your question directly, we spent about $1.5 million US in exploration in the second half, primarily all in the second half of 2020. My expectations for 2021 will be roughly $1 million going up until about September, and then we'll evaluate what our spending needs will be after that. It'll be a function of permitting as well.
I think you answered this one in your presentation, but it says Allegiant does not seem to release operational updates as often as other juniors. Do you expect more operational updates going forward?
I mean, we tend to release operational updates. I think what people want are, 1 or 2 hole assays, which I just don't feel is how the industry should operate. Finding gold is not excessively difficult. Building a resource is extremely difficult, and we've been able to put together a resource which I think is the envy in many parts of Nevada. We're just going to do it very methodical, and we believe that investors should come into Allegiant based on the 5 main points I addressed, which is we believe that if I look at the junior exploration industry and I evaluate based on jurisdiction and team and cash and everything else, I'd be hard pressed to find another company as attractive. But of course, I'm biased. We try to give information on a regular basis, but we have never been. I'm personally not in favor of releasing every assay or every 2 assays. I think it should be done in a comprehensive way. That way people can evaluate it based on the whole package, as opposed to, wow, we ran 40 meters at 2 grams a ton. Okay, great, that's 1 hole. Give me the whole thing, where people can make more an educated decision.
Next one is, what do you see as the most common mistakes made in the junior exploration space, and what are some helpful hints to differentiate potential winning junior explorers from the losers?
Well, I guess, are you talking about from an investor perspective or for a company's perspective?
I would address the first one from a company perspective. In other words, what do you see as the most common mistakes on the part of management in the junior exploration space? And then the second part of that question would be more for the investor. What should they be looking for to help them differentiate the potential winning companies from the losers?
I think people need to do a better job of educating investors that this is a long-term industry, similar to a venture capital private equity industry. And you can't really judge a company or a resource based on 1 hole or 2 holes. You need to look at the whole package. And I think that management, in their, I want to say, desperation to constantly raise money, they're constantly trying to put out these news releases, which, in my opinion, may not necessarily be that material. And so I think management, I think that's 1. 2, what I think management does a poor job is allocating capital. Much of this industry raises capital so it can go into G&A and IR and PR and everything, when I think management needs to spend well over 50% and hopeful 70% of the capital they have and have raised that should go into technical, into the ground. And third is, I think management has done a poor job of as a whole, as an industry, of just talking to investors as if this were a long-term investment. I know that's similar to what I said in the first one. The difference is in how they release information. Now, the second part of the question is what investors need to look at. I go back to those 5 points I discussed. Are you going to be diluted? Are you looking to find gold, or are you looking for a company? And then the risk the risk variance is significantly different between a company trying to find a resource than a company that already has a resource and all they're trying to do is improve the economics or increase the size of those resources. So I would look at the 5 points I discussed at the beginning of the presentation. As an investor, and I have been for 20 years, I tend to use those as my guidepost to selecting the best companies. And management's very, very important, but jurisdiction's equally important. And when you talk about management, well, it's not just the reputation of the management, it's, are they advancing the projects in a efficient, or less dilutive manner? Because building a company that has $400 million in market cap is a lot different than building a company, and investors could lose money as you go from 50 million to 400 million because you just issued 1 billion pieces of shares. As an investor, investors should look at, are they making money on a price per share basis, not because the market cap went up.
And I guess to follow on from your presentation, what did you make of Fed Chair Jay Powell's comment that Bitcoin is a substitute for gold?
I think I don't agree with that, and I don't agree for a few reasons. Bitcoin is just, so people tend to look at Bitcoin and say, well, Bitcoin only has 15 million coins or 13 or 20 million and it's capped. Well, that's only looking at the picture one way. I mean, there are hundreds of cryptocurrencies. So although Bitcoin may have a $1 trillion market cap, there's 99 or 200 other cryptocurrencies that are in the market, including Ethereum and everything else, and Litecoin. So if you look at the entire market, it's about 1.5 trillion. I think there's some advantages of Bitcoin and what I'd rather call it cryptocurrencies, but I do not see it as a better version of gold where the intrinsic value of Bitcoin is just really an unknown factor. Maybe a store of value as long as people believe there's value, but there's just really no history behind it. You'd have, in 20 years, maybe you could say that because now you have 20 years of data. I don't believe it's a substitute. I do believe, though, that the world governments are going to move into digital currencies, which will compete against the existing digital currencies led by Bitcoin. Once that occurs, and that's absolutely going to happen, it's already starting. Once that happens, it's game over for the rest of them.
Well, I think I would just add on to that to say that I think in the context as a speculative vehicle, I think that was probably the point he was trying to make, that as a speculative vehicle, Bitcoin and gold, are both, vehicles for that, as really could be any item. But there's a reason why the U.S. Treasury keeps bullion reserves at Fort Knox, and while we may have gone off the gold standard, having the reserves of gold, lends some credibility to the currency. The next question is, what is the M&A environment like, and is Allegiant a buyer or a seller?
I think the M&A environment, at least what we see around us, and we're in the middle of a lot of these things, is starting to really take off. I think you're starting to see companies wanting to get together. I think there's that desire of them wanting to get together, and that's something I didn't see maybe a year ago or 2 years ago. And so I don't think the environment is booming, but I do think it is getting better. With respect to Allegiant, Allegiant is, I wouldn't say neither a buyer or a seller. It's just, do we see companies that have a shared philosophy with us in an area where there's a safe jurisdiction? They believe that money should go into the ground instead of in G&A, and they've been able to protect shareholder capital through dilution. If they have that, and they have a series of projects, or one project that I think is a complementary fit, I think there's Allegiant. We don't mind if they're bigger or seller. I mean, we believe the industry needs to get bigger, and that is through M&A. So we're not particularly concerned whether we are the buyers or the sellers, but we're more interested in partnerships where we can get together because there's a shared commonality and philosophy in how we see the world. And I think there's a few companies out there. I don't think there's a lot for Allegiant. I think there's a few.
There's another, it's more of a comment. It says, we're not asking for singular drill result news releases. Allegiant drilled 35 to 40 holes starting last September and ended a long time ago, but we heard nothing until today. They could stand to update their corporate presentations more frequently. So with that, I guess, could you just kind of go through or repeat the immediate plans that will lead up to this next press release? I think you'd mentioned the 4,000 meters of drilling, just so if people didn't catch, what's going to be in the next update.
Yeah, so I think that's a fair comment. We apologize. I think we're putting together, one of the things is we wanted to create a very, very comprehensive review and a graphic presentation with respect to what occurred in the South Zone. Now, once again, we had three main objectives and goals. One was to verify the existing resource or historical. Two was to add some ounces, and three is to discuss and to show low strip ratio in that area. And putting all that data together, first of all, getting the assays were delayed for a lot longer time than most people. Usually you would get them 2 to 3 weeks. There was a long delay for a few reasons. One, COVID, and then after that, and that wasn't the reason, at the end of the year as much. It was just that everyone was drilling at the same time because of all of the influx of capital that came in. So the labs were actually very, very busy. We do have everything now, and we're putting everything together, and we do have most of the information to now come up with a news release. I think that we owe it to the market, and we will come out with a bunch of things. We're just trying to figure out whether that makes sense. So we put it all in this global news release on the South and the North Zone, which is very comprehensive and gives you a much better picture of what we're trying to achieve. But yeah, it's a fair comment, and we're going to do better. We've updated the presentation, and we will be, we're going to be putting that onto our website in the next week.
Next question is, what are the company's funding needs for 2021? And you might tie that back to the options and maybe highlight how that really kind of subsidizes your costs.
Yeah, and our funding needs depends on what we want to do at the back half of the year. So, if we're not going to do a lot of drilling at the back half of the year, then we're probably not going to do any fundraising, and it's just going to be a function of the markets. If the markets are healthy, then we would potentially raise money to drill more. If not, we're very comfortable with where we're at, and the partners we have now. If that changes, then we have to change. But at this point, we're fairly comfortable where we stand and meeting our obligations.
And then the next question asks, draw a distinction between the updated mineral resource estimate and the scoping study, and a little more clarity on the timing.
So on the updated resource estimate, we're going to probably be coming out. We're going to wait for the final assays on the drilling of the North Zone, which I expect will be completed by Monday or Tuesday, the last of the hole, the last 1-2 holes. They're much deeper holes than we did in the South Zone. So each hole takes a little bit longer than, say, we were drilling in the South Zone, where you could drill 150 meters, 130 meters. We're drilling 400, 420 meter holes in the North Zone. After that's completed, and we've already started the initial process of updating the 43-101, we'll complete that. And once that's completed, we've already started part of the scoping study. Then we'll move towards that. In terms of timing, I'd like to say, sometime in April we'll come up with a resource estimate, and then sometime in May a scoping study, or June. It depends on the timing. If it's late April on the 43-101, then we project 4 to 5 weeks after that for the scoping study.
That's all the time we have today. Thank you for the comprehensive presentation. If you'd like access to our independent research on Allegiant Gold, please go to channelchek.com and type the company name or the ticker AUXXF in the search box located in the top left company data section of the site.
Thank you for joining us for this virtual roadshow presentation brought to you by Channelchek. View our YouTube channel for more video content, including C-suite interviews, virtual roadshows, and conference presentation replays. New content is added regularly, so subscribe below to stay up to date. Visit channelchek.com or click the link in the description to access equity research, news, and advanced market data on this and 6,000 other small and microcap companies.